Every tax deduction truckers forget to claim. Here's a number that should make you angry. The average owner-operator overpays the IRS by $2,000 to $5,000 a year, not because they're doing anything wrong, but because nobody ever sat them down and explained what's actually deductible in this job. You're not bad at taxes, you just never got the training. Most drivers learn how to back up a 53-foot trailer into a tight dock before anyone teaches them what a Schedule C even is. Let's fix that right now. Start with per diem, because this is the big one. If you're away from home overnight for work, the IRS lets you deduct a daily meal and incidental expense allowance. Right now, that's roughly $80 a day, depending on the year and location, without saving a single fast food receipt. Drivers who are out 300 days a year are sitting on a deduction worth well over $20,000 in per diem alone, and a huge number of them either don't claim it, split it wrong between company reimbursement and self-claimed days, or just skip it entirely because their preparer doesn't understand the transportation industry rules. If your tax preparer has never asked how many nights you spent away from home last year, that's a red flag. Next, your truck itself, which is really your business, not just your vehicle. Depreciation on the truck, lease or loan interest, tires, oil changes, DOT-required inspections, the truck wash you pay for at every stop. All of it is deductible if you're an owner-operator or 1099 contractor. So is the cost of your logbook subscription, your EOD device, your CB radio, load board subscriptions, dash cam, and even the coffee maker or mini fridge bolted into your cab if you can show it's for work use on the road. People treat these like personal expenses because they happen inside a vehicle they also sleep in. The IRS treats them as the ordinary cost of running a trucking business, which is exactly what they are. Then there's the stuff almost nobody claims because it feels too small to matter. Your cell phone plan at the work use percentage, sunglasses and work gloves bought specifically for the job, truck parking and toll fees, satellite radio if you use it for weather and traffic routing, business-related tolls and scale fees, and even a portion of your health insurance premium if you're self-employed and paying for your own coverage. Add in association dues, continuing education or endorsement renewal costs, safety gear like steel-toe boots and reflective vests, and the portion of your home internet you use for logging loads and doing paperwork between runs. None of these feel like real deductions because they're small and everyday. But small and everyday, multiplied by 52 weeks a year, is exactly how $2,000 to $3,000 quietly disappears every single tax season. Even paid truck parking, when you're paying out of pocket for a safe, guaranteed spot instead of circling a full lot at 10 at night, is a legitimate business expense. Just make sure you're saving the receipt. Quick disclaimer because this matters. This is general financial education to help you know what questions to ask your preparer, not personalized tax advice for your specific situation. Every state, entity setup, and carrier agreement is a little different, so talk to a licensed tax professional before you file anything.
So here's what actually works. Rule 1. Track your per diem days on a simple calendar app or app made for drivers. The whole year. Don't try to reconstruct 300 nights on the road from memory in April. Rule 2. Keep every receipt tied to the truck. Fuel, maintenance, tires, parking, tolls, in one folder, physical or digital, the moment you get it, not stuffed in a glove box you'll deal with later. Rule 3. Hire a tax preparer who specifically works with truckers or owner-operators, not a general accountant who mostly does W-2 returns. A trucking-specific preparer already knows about per diem rules, Section 179 equipment depreciation, and mileage versus actual expense elections that a generalist will completely miss. And that specialized knowledge alone often pays for their fee 3 or 4 times over in a single filing. Here's the truth. The tax code isn't out to get you, but it also isn't going to chase you down and hand you money you didn't ask for. Every deduction you don't claim is a deduction the government is more than happy to keep. The drivers who build real wealth in this industry usually aren't the ones who haul the most miles or make the biggest gross. They're the ones who keep the most of what they actually earn, deduction by deduction, receipt by receipt. Next video, we're breaking down the real difference between being 1099 and W-2 in this industry, and when nobody tells you about the trade-offs between the two. Subscribe, because we're doing this every single week.